Time now for the markets with Leighton. I understand there's one crop in Georgia that hasn't been as damaged by the hurricane as most of the others.
A little amazing fact, Mike, but true. We'll have more on that in a moment. Also, the latest supply-demand report is called a mixed bag as far as soybeans. U.S. corn exports are helped by the claim it's the cheapest feed grain, and more cases of African swine fever add some support to hog prices. The big losses to the cotton industry from Hurricane Michael are becoming clearer. Analyst Jeff Thompson says on agfacts.com he estimates a total of 1 million bales of cotton were lost to the storm in Alabama, Florida, and Georgia. The monetary loss to producers in those three states is now estimated to be $400 million. Well, much has been said about the hurricane damage to cotton and pecans 2 weeks ago, but what about Georgia peanuts? Well, an official with the National Peanut Association says there's actually still a surplus of peanuts after all the damage is calculated. Tyron Spearman says the storm obviously will reduce peanut production this year in the region, but, quote, not enough to affect prices. Larger ending stocks of U.S. corn and U.S. soybeans is one headline out of this month's USDA supply-demand report. Josh Maples explains now why it was a mixed bag for the grain market. He begins his story describing the small changes to the corn numbers from a month ago.
The yield estimate was decreased slightly, so that would suggest lower domestic production. However, beginning stocks were revised and raised. So although we're expecting lower production, we have larger beginning stocks. You put those two together and we actually ended up with larger expected ending stocks. So that's why I'm calling it a mixed bag and not a lot in there on either side.
Tell me about the updated outlook for soybean production in the U.S.
So soybean yields were bumped up just a little bit, just above 53 bushels per acre, which is a big number. So that would suggest more production. However, the estimated number of acres that are going to be harvested or that have been harvested was decreased. So actually production estimates, even with the larger yield, are lower, but similar to corn, we've got larger beginning stocks than we had in September. So put all that together, and again, we've got larger expected ending stocks and another mixed bag in terms of price outlook.
And what was the story as far as U.S. cotton at this point?
So cotton, larger production and lower exports were the big changes from the September report. So production increased 81,000 bales, due mostly to increases in Texas and Georgia.
Now, those numbers were compiled before the crop losses due to Hurricane Michael in the southeast. The same report increased expected U.S. corn exports. Trader Tom Fitzenmeyer now describes how he sees this segment of the grains shaping up.
I think you could see corn work up another 10 or 15 cents. You know, they did bump exports a little bit. Mm-hmm. Now, weekly exports this week were really quite disappointing. We've got really good export sales are high relative to a year ago, but a year ago they weren't very good. So you aren't comparing. That comparison I'm not sure is valid. In terms of what we need on a weekly basis to meet the USDA's projections, we're lagging behind. We've got the cheapest feed grain in the world in U.S. corn, so it should translate to good exports. I guess we'll have to see.
It's time now for our trivia quiz on Farm Week. This week's question is about how Americans buy their food these days. Here is the quiz question. How many U.S. adults buy their groceries online now? Is the answer A, 17%, B, 26%, C, 35%, or D, 44%? We'll have that answer, of course, coming up a bit later. As the weeks roll on, African swine fever spreads further in China. The outbreak began mostly in northern and eastern provinces, but this week it is also being reported in the southwestern areas of China. 27 cities are reported to be affected so far. Trader Brian Roach says the evolving situation there should support U.S. hog markets.
I don't see a lot of downside for the pork right now. We saw a couple more cases in China today.
I think
something new in Belgium. So you know that. Plus, we're shutting down a fair amount of production in the East Coast, which I think keeps things well supported. And then also wholesale demand has perked up from very low levels. So the real trick here is to how to play it. And one way you might look is the October-December spread is typically minus 60 to plus 50 cents. That normally trades 350 to 450 to 5. That might be something to look at, but also look at February as a good place to start laying in some hedges.
Our last stop of the week in the markets, the feeder cattle market, where prices kind of appear to be range bound. Trader Don Roos talks about what may be ahead here for the beef sector.
Feeders, I still think, have a nice bid underneath of them because of the cheap input costs. But I think when you have the feeders between 160, 155, 160, that's the upper end of the range, just from a break-even standpoint. You can put a rate of gain on, or a pound of gain on for about 55, 60 cents. So I think that's a number that works.
And we circle back to the trivia quiz to wrap up the markets. Our question again, how do you shop for food? And how specifically U.S. adults buy their groceries? How many buy them online? The answer is C, 35%. The survey was done in February.